Welcome to another wealthmanagement.com Fast Chat. I'm Ryan Nauman, market strategist with Informa Intelligence, here with Stacy Morris, Director of Research, Alarian. Today, we're here to discuss investing in energy infrastructure. Specifically, what is energy infrastructure? How does it differ from other energy investments? And finally, how can one incorporate this asset class into investment portfolios? With that, I'd like to bring in Stacy, who's an industry recognized thought leader in the energy infrastructure space. So let's go ahead and start off the discussion by reviewing exactly what is energy infrastructure.
Sure, Ryan. So Alarian focuses on midstream energy infrastructure. And these are the assets that really perform the shipping and handling function of the energy value chain. So think about pipelines that move oil and natural gas from production areas to where they're ultimately consumed. Think about the processing facilities that process natural gas into a useful form. Think about things like storage terminals that store gasoline and diesel before it gets to your local gas station. And then even the facilities that export U.S. energy, whether that's exporting liquefied natural gas or things like propane and butane. So energy infrastructure encompasses all of these things, and it really provides a critical service to our everyday lives, although we probably don't think about it too often. But things that we do every day, like filling up your tank with gasoline, driving to work, or using natural gas to cook on your stove, or even just turning on your lights with electricity that comes from natural gas. All of that is facilitated by energy infrastructure. And so these are really important assets to our everyday lives, but they're also interesting from an investment standpoint as well, as I'm sure we'll discuss.
That is very helpful, thank you. There is also some belief that you can gain exposure to a space by investing in the energy sector, but that is not necessarily the case. Can you please tell us how energy infrastructure differs from other energy sectors, such as oil and gas producers or the integrated sector majors?
Sure. So, not every energy company is the same, and they're not all created equal. And what's different about midstream energy infrastructure is that these companies are typically generating a fee. So they're providing a service and generating a fee, and that results in stable cash flows. And those stable cash flows have historically been used to provide generous dividends to investors. If you own something like an oil and gas producer or an integrated major like Exxon or Chevron, their cash flows are going to be much more variable and much more dependent on what's happening with oil and gas prices. If oil and gas prices are high, they're going to make a lot of money. If prices are low, they're not. So midstream energy infrastructure is different because it's fee-based, and that results in more stable cash flows. And those stable cash flows have supported generous dividends historically.
Fantastic. So investors, as we know, are faced with a lot of uncertainties right now, from shifting monetary policies to trying to locate investments that increase portfolio diversification. Why is energy infrastructure attractive from an investment perspective?
Absolutely. I mean, there's a lot going on, as you mentioned, Ryan. And I think one of the concerns that investors have is where they're going to find income. And historically, income has been a major attraction of this space. If you look at some of our energy infrastructure indexes, the yields have historically averaged between 5 and 8%, kind of depending on the makeup of the individual index. So the income here is very attractive, and for investors who are looking at yields today across income assets and wondering where they can find more yield, this would be a great space to look at. Additionally, this space has been attractive because it provides real asset exposure. So inflation is also top of mind, and often these companies have inflation protection built into their contracts. They're operating real assets, steel in the ground. So it can also be a good space to look at if you're worried about inflation. And then additionally, we also see people use this space as the energy allocation in their equity portfolios. As I mentioned, the businesses here are more fee-based, and so this provides more defensive energy exposure relative to a more general energy allocation, or buying a small natural gas or oil producer, for example. So income is front and center, but there's also real asset exposure here, and then defensive energy exposure as well.
That's great. And when you consider the macro backdrop of historically low interest rates and historically high inflation, sounds like a great opportunity for the space. The information you provided is fantastic and really showcases the what and why behind energy infrastructure. But maybe most important is the how. So how can one incorporate energy infrastructure in a portfolio?
Sure. So because the income is so generous, we typically see energy infrastructure as an allocation in an income portfolio. It may just be around 3 to 5%, sometimes more depending on the goals of the portfolio, but it doesn't take a large allocation to have a significant positive impact on the overall portfolio yield because the income here is so generous. So typically it's an income allocation. We do sometimes see it used in real asset sleeves or as the energy allocation in a general equity portfolio. Master limited partnerships or MLPs are also a significant portion of the energy infrastructure space. So for that reason, we also sometimes see it used in alternative sleeves. But there's a number of different ways that you can kind of use this space in your portfolios and benefit from the diversification benefits here, as well as the income opportunity. And for investors who are looking at ways to allocate to this space, of course, you can go out and buy individual names, but you can also access the space through a product which provides diversified exposure in one place and also a 1099 at tax time. So again, there's a number of ways to kind of use this space and to invest in it. And it's really a compelling opportunity, especially for those who are looking for income and inflation protection today.
That's fantastic. The information you've provided has been very insightful. Thank you. I know I've learned a lot, and I think our viewers have learned a lot also. So let's say I want more information. Where can investors learn more?
Sure. So you can learn more from our energy infrastructure primer, which we've just updated. It's really a useful tool, whether you're new to this space or you've invested here before. It covers the basics all the way up to how to invest in this space and different considerations if you're looking at different investment products like ETFs or exchange traded notes or other ways to access the space. So it's a really great resource. It should be linked below this video. You can also find it on our website at alarianandsnet.com. That's alarianandsnet.com. No spaces, no dashes. And if you're interested in the midstream energy infrastructure space, you can also sign up for our research on alarianandsnet.com. So we provide weekly research on the space and a number of resources beyond just the primer. So that's a great resource for anyone who's interested in this space.
Great. Thank you so much, Stacy, for joining this wealthmanagement.com Fast Chat. And thank you to our viewers for watching.